had a meeting with Priya and Varuns recently. They were both first homeowners based in Victoria and were pretty green on the whole process. They had a meeting with their bank about a month ago and had successfully secured a pre-approval. You see, they'd been banking with their bank their whole life and felt it only natural to go back to them as soon as they were ready for a home loan. I asked the clients why they were getting in touch with myself because as a mortgage broker, we help with finances through a range of lenders. And the best part, there was no cost for the service and it appeared to me that their finances were already in order. Varun explained when they had their meeting with the lending manager, they felt as if the lending manager didn't know what they were doing. Questions they asked the representative were answered with ums and ahs or let me check with my manager, and they didn't exactly feel confident. When Priya asked the lending manager if they'd personally owned a property before, they replied no. This was one of many red flags for the couple. They also went on to explain that the lending manager focused more on the details of the application, such as filling in the name, address, and date of birth, rather than what schemes and grants were available or that they qualified for, and they didn't provide much guidance on the process of buying, researching, or negotiating. Varun and Priya had attained their pre-approval, but had no idea on the process of purchasing a property or the schemes and grants they qualified for. In fact, the information they provided showed that they'd need to pay $15,000 in lender's mortgage insurance. They felt that having a chat with someone like myself would be a worthwhile exercise. After all, they were highly recommended by Varun's brother who lives in Sydney. I said to Varun and Priya that all made sense and continued with our meeting. We went through the buying process from researching to negotiating to terms you need to put on a contract to sale, as well as the different schemes, grants, and concessions that were available. They had no idea that they qualified for the Home Guarantee Scheme, formerly known as the First Home Loan Deposit Scheme, which allows you to buy with as little as a 5% deposit. They had no idea what the Home Guarantee Scheme was when we started. By the end of our conversation, they found out they qualified, and it'd mean that they'd save $15,000 in lender's mortgage insurance. They were related, but they were also a little bit disappointed, as nearly everything we'd covered wasn't ever explained when they secured the pre-approval with their bank directly. Priya asked me what should she do, as she wanted to get the loan through myself, but had the pre-approval with her bank already. We explained to her that the lender she went with wasn't a participating lender that could offer the Home Guarantee Scheme, and if she continued with them, the mortgage insurance would be applicable if she continued down that path. She was also worried about her credit file because she did do a pre-approval about a month ago, and she was worried if she started the process with us to secure a spot under the scheme, that might have an impact on her ability to borrow or even secure a loan in the future. We explained how a home loan inquiry is the highest form of application seen on a credit file, and yes, it will be an inquiry, but it's not going to stop you from attaining credit in the future. They decided to withdraw their application with the bank they had originally got their pre-approval for that wasn't eligible to get a spot under the scheme, and requested that we assist with getting things sorted under the Home Guarantee Scheme with one of the lenders on our panel, which saved them thousands of dollars in lender's mortgage insurance. Today, I'm going to go through common mistakes first homeowners are making regarding the Home Guarantee Scheme. Mistake number one, they don't know what the Home Guarantee Scheme is. If you find these videos helpful, do me a little favor and hit that subscribe button below so you can keep up to date with our latest information that comes out. The First Home Guarantee Scheme, previously known as the First Home Loan Deposit Scheme, is like having the government act as your guarantor, which means you can buy with as little as 5% deposit and you can avoid paying lender's mortgage insurance. As we talked about in Priya and Varun's case, that saved them $15,000. As you know, that mortgage insurance doesn't protect you, it protects the banks. The scheme also supports up to 35,000 first homeowners per financial year to buy a home with a low deposit. It works on a first come, first go basis, and there's income and price caps on this scheme, which we'll cover soon. Mistake number two is not realizing how much lender's mortgage insurance is saved with the scheme. The lender's mortgage insurance is calculated on a sliding scale. The actual savings vary depending on the deposit. For example, a home buyer purchasing a property with minimal deposit on a $750,000 purchase would have $26,000 in lender's mortgage insurance outside of the scheme. Under the Home Guarantee Scheme, that is absolutely waived. Mistake number three is not understanding the price cap. For the Home Guarantee Scheme, both newly constructed and existing homes qualify for this scheme, but there is a price cap you need to keep under. It changes from state to state, region to region, capital city to capital city. We've got the numbers on the screen. You can pause it and have a look at the differences based on the state you're in. Throughout the country, some regional centers are allocated a higher cap. This means that buyers can purchase at a higher price and still be eligible for the scheme. This is determined by the population of the region. The government outlines that these regional centers with over 250,000 people, like the Gold Coast, Perth, Geelong, and Newcastle have higher price caps. Mistake number 4 is not understanding the deposit requirement. If you're buying a home, you generally need to save at least 20% of the property value to avoid paying the mortgage insurance or rely on your parents to act as a guarantor. Using the home guarantee scheme, you only need to put down 5% of the property value towards your deposit, with the government acting as a guarantor covering the 15% of the property value, so you don't need to pay for lender's mortgage insurance. This means you can borrow up to 95% of the property value without paying a cent in lender's mortgage insurance costs. A 20% deposit on the current median dwelling values across Australia equates to about $150,000. This takes the average household about 11.4 years to save up. The home guarantee scheme cuts this amount to 5%, which means you can get into the market much faster without the need to pay lender's mortgage insurance. Remember, there's 35,000 spots available per financial year. Mistake number 5 is not understanding the criteria. There is a bunch of different criteria you need to meet to qualify for the home guarantee scheme. There's an income requirement, so if you're single, you can't have earned more than $125,000 for the previous financial year, FY 2022, or $200,000 as a couple. The deposit you need is at least 5% saved up, and you need to have saved that over a 3-month period or longer. You must be both first homeowners and Australian citizens only. If you're a permanent resident, unfortunately, you wouldn't qualify for this. You need to meet the price cap limits. We talked about that earlier. As long as you're purchasing at or below the limits that they set, you need to be 18 years or older. With living arrangements, you must move in and live in the property as your home within 6 months. If you don't, you will no longer be covered under the scheme. If you're buying as a couple, you must be doing it with either a married spouse or a de facto. You can't be doing it with siblings. And there are only 27 lenders that can offer the scheme. You must also have never held a property in Australia, including a lease of a land or company title. Mistake number 6 first homeowners are making is they don't understand that they can double dip on the schemes and grants available. Sarah and Albie had been saving for a few years for their first home, but were struggling to build up more than 10% deposit to get in the market. They found the perfect home for $400,000 and wanted to see if the home guarantee scheme made sense. They were also eligible for the $15,000 first homeowners grant as the property was brand new. What this meant was they were able to get their lender's mortgage insurance of about $10,000 waived. They also received $15,000 from the government, and their stamp duty was waived as well. They got to double dip on 3 separate concessions and schemes and grants that were available to them. Mistake number 7 is not understanding which banks have access to the scheme. There are 27 participating lenders under the first home loan deposit scheme. We'll put them up on the screen. They range from the 2 big banks, CommBank and NAB, Auswide Bank to Beyond Bank to MyState Bank to QBank, and the list goes on. Mistake number 8 is first homeowners don't understand how to apply for the home guarantee. Applying for the scheme is super simple. You need to have your Medicare card, you need to have your notice of assessment for the taxable year ending 2021, 2022, and the general lending documents you'd expect for your home loan application, things like payslips and bank statements. From there, as your mortgage broker, we'll take care of all the details with the bank. We need to make sure that you're not lending over 95% of the property value, that the value of the property doesn't exceed the price caps for the area. We're applying with one of the 27 lenders that can offer the scheme and still has spots available, and the loan term doesn't exceed the maximum of 30 years. The good news is when we apply through one of the participating lenders, they'll be able to help us take care of all the details with securing that spot directly through the government, so we don't have to do multiple applications through different organizations and agencies. It's taken care of through our process when we're dealing with the bank. One question I get asked a lot is, do I just need a 5% deposit for the home guarantee scheme? Well, in addition to the minimum 5% savings under the scheme, home buyers will need to cover for things like stamp duty, bank fees, and legal costs. For example, on a purchase of about $600,000, depending on which state you're on and the stamp duty concessions you get, that can add up to an additional $20,000 in costs for stamp duties, transfers, government fees, bank fees, conveyancing, billing a pest, the list goes on. Which would mean a 5% deposit on a $600,000 purchase would be $30,000 plus the $20,000 for those additional fees, bringing your total deposit to $50,000. How long will the guarantee last? The current home guarantee scheme will end on the 30th of June 2023 with 35,000 spots guaranteed on a first come first go basis. Once the spots are exhausted, then that's it. There's no more spots available. Did you know here at Hunter Galloway we get mortgages approved? So if you're living in Australia looking for a great mortgage broker, we can help. We're based in Brisbane and deal with people Australia-wide, so reach out with us at huntergalloway.com.au or call us on 1300 088 065 and we'll see you next time.